you wanted the best, you've got the best podcast, the hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hi, folks. It's Voss here from the Chris Voss Show.com. Ladies and gentlemen, there are ladies, things that makes it official. Welcome to the big show. As always, the Chris Voss Show is a family that loves you but doesn't judge you and wants to make your world better, and all of that wonderful, crazy, high-end stuff that we do on the Chris Voss Show to make everything work. So what we need you folks to do is go to goodreads.com/Chris Voss, linkedin.com/Chris Voss, Chris Voss 1 on the TikTok, and all those crazy places on the internet. Opinions expressed by guests on the podcast are solely their own and do not necessarily reflect the opinions of the host or the Chris Voss Show. Some guests of the show may be advertising on the podcast, but it is not an endorsement or review of any kind. Today we're going to be talking to a young man and learning about his entrepreneurial journey, some of the wonderful stuff he does in the world of trading and options. So we're going to get into that as well. David Chau is going to be joining us. He's known as Captain Condor. He is the visionary behind the SPX program at Inside Options LLC, an options trading group dedicated to empowering traders through education and innovative strategies. He is the founder of SPX Management LLC, a boutique alternative investment firm specializing in non-directional option strategies, where he actively trades the very strategy that he shares with the group. Since launching Inside Options in 2020 and introducing the SPX program in May of 2022, he has mentored over 1,000 options traders, helping both beginners and experienced professionals redefine their skills and achieve consistency in the markets. Welcome to the show, David. How are you?
Hey, how's it going? Thanks for having me on the show. And just real quick, I disconnected a couple times. So
the internet's gods are either with us or not. So give us your .coms or .ios. I think where we can find you on the interwebs.
Well, you can find me on insideoptions.io. That's my primary website for Inside Options. .com, I think .com was taken, but IO it worked a bit better.
Give us a 30,000 overview of what you guys do there at your company.
I've been trading for about 10 plus years now, and I've been trading since I was 18, and at the time there wasn't really that much educational material. It's kind of like a lot of it was just like throwing stuff to the wall and seeing what sticks, drawing like lines that sometimes didn't make sense until it did. And then eventually, I picked up a few things and found some strategies that worked and built a community in 2020 because, I initially didn't really want to create an options trading community where I guess people, I'm a big introvert, so I like keeping things to myself. But my wife kind of, she kind of convinced me to do it just because a lot of my friends were asking me close people asking me how do you get started? I want to get into stocks. I want to get into options. And there wasn't a lot of, creators back then. And I feel like it's the same now. There's actually a lot of content on YouTube, but none of them are really structured and actionable. You can't watch a video and you can't act on it. Yeah. And the market's always changing too. Mm-hmm. With that being said, all the materials sometimes can even be, obsolete. So sometimes.
Yeah. And so you provide this options service. How did you get into options trading and all this sort of stuff?
When I looked into options trading, the reason why I did it was because I went to college. I went to UC Santa Cruz for about 2 years. And during that time, let's just say I didn't make it. So I dropped out my second year. I wasn't doing really good in business and economics and just in all those classes, which is kind of ironic because that's kind of what I ended up doing. Mm-hmm. And so in my head, I like looking 10 years forward, as a visionary. Mm-hmm. So whenever I do that, I always look at, what kind of vehicles, what kind of businesses can actually take me to the place I want to be. And so I saw that, I was kind of diving already into the stock market and kind of exploring options. And I saw that, hey, there's a lot of leverage here, and there's some ways that you can make money here.
Yeah.
But I learned the hard way, right? So
that's kind of how we all learn in life. No one gets an owner's manual, right?
But I always see it as a cost of doing business. It's a tuition that you pay.
That's an interesting. Now, the learning, the education, and going through the gauntlet of mastering the stuff, is that what you mean?
Yeah, I think so. And the reason why I say that is because there isn't really one way to go about learning how to trade options. In my opinion, I think sometimes it's more art than science. The only science part is the quantifiable parts of the trading, and that's kind of what we focus on now with inside options. Actually, when we started inside options in 2020, it wasn't the best, but I had a lot of material that I learned over the past 10 years that I wish I knew earlier, and I kind of started with that, and the community built to about 100 or so people, and what really took off and what kind of broke the ground for me was in 2022 when CBOE, which is the Chicago Board of Exchange, they released daily option expirations. And during that time, earlier that year, I was, studying different types of businesses, specifically, I guess you could say casinos, right? Because casinos, it's a statistical based business. And we kind of found that, there were certain ways to exploit the market, right? And so we kind of took that over we kind of saw what was working in I guess the business of casinos and transitioned it to the stock market. Like, for example, card counting is pretty big with casinos, and I watched the movie 21, and I read it, I studied it, and
really,
there's what card counting is there's 52 cards in a deck. If there's more low cards that come out, the chances of high cards will come out, right? And I mean, there was a group like the MIT blackjack team. They made it out with hundreds of millions of dollars, because they kind of found a way to beat the edge. And then me being an entrepreneur, I'm how can this apply to the stock market, right? And when CBOE, Chicago Board of Exchange, released a daily option expiration, what that means is that options, they have expirations, right? And before they had options expiring Monday, Wednesday, Fridays. When that update released, it was Monday, Tuesday, Wednesday, Thursday, Friday, basically all week. And so we found that there were different ways to apply statistics to the stock market, right?
Yeah.
So the way we're exploiting the market is that we believe that the market is efficient. It's known as market efficiency hypothesis. And what that kind of says is that the market will always pay you based on the risk that you take, right? There's no edge. So if you were to risk $100, for example, to make $100, right, it's a 1-to-1. So your probability is baked into your risk. So if you're risking 100 and you're making 100, your probability is about 50%. But what's interesting about the market is that, and options specifically, is that you can manipulate the trade setup, right? So you can manipulate the trade setup to a point where your probability of profit might be 68%. And so 68% conveniently is also known as one standard deviation. And so we understood that because the market is efficient, there's no edge. So why would we make money if we have a 68% chance of winning, but the risk reflects that, right?
Yeah.
And so what we also discovered on top of that was that we focused on something known as positive expectancy, right? So what positive expectancy means is that a great analogy for this actually is like a coin flip. So if I made a bet with you with a coin flip, and every time the coin flipped and landed on heads, you would make $20. If it landed on tails, you would lose $10, right? And so if the probability probability is 50-50, but you're making more money than you lose on each flip. Over 100 flips, 1,000 flips, you're guaranteed to make money. There's linear growth to that portfolio. And so
you guys help people do that with the community. How many people are in your community now, if you don't mind me asking, or how does the community work?
Yeah, so now we have about 1,200 people in the community now, and I think a big part of it came from the Wall Street Journal feature recently.
Tell us about that.
Yeah, so we trade a significant amount of options in the stock market, and sometimes the sizes are larger than JP Morgan's collar trades.
Wow,
I would say that, and that's pretty significant.
Yeah.
And so all these options that are placed in the market, they are public, so anybody can see them. And there's one tool that people typically use to see these things, and it just became like people post them on X. They're like, well, there's somebody putting on 13,000 contracts, 60,000 contracts, and they never knew who it was for a good, I would say like a good. We've been doing this for like 3 years, so like nobody knew like who it was. And then I guess like rumors kind of leaked out, of course, because our group's growing, so a lot of people come to our group.
Yeah,
and they all also follow other people, and that word got out that there was somebody that was named David Chau. They had a nickname for me too, which is Captain Condor. And so,
Captain Condor.
Yeah,
where does that come from?
Just a name they gave me, and that's what they called me.
I think there was a movie about that, wasn't there?
Maybe I haven't watched any movies.
I think Captain Condor.
I looked it up and I was like, well, there's a superhero.
Yeah,
I've never heard of that, but like the Wall Street Journal feature, like really kind of it exploded, and a lot of people kind of figured out what we were doing, and we were known for the sizes that we're putting on.
Wow.
And so that's another reason for, I guess, some of our success. It kind of validates kind of what we're doing too. One of the strategies that we used is actually banned in casinos, and we haven't talked about that yet. And we always go back to the casinos because it's a business, right? And so you always evaluate different businesses that are kind of similar to yours. Like for example, when we sell Iron Condors, Iron Condor essentially it's comprised of 4 different legs. It doesn't really matter. Like if you're not an option trader, it doesn't really matter to understand it too much. All you need to understand is that we're betting on a range. Right. So if the market stays within a specific range, kind of like a tennis, like when the ball stays between the court, we make money. Right. And when we put on our trades, we set up, because the market is, flexible, we set up our trades to be within a standard deviation. So we have a 68% chance of winning. So now the concept that we kind of applied from the casinos to the stock market now is that we use a strategy known as the martingale strategy. That's banned in casinos. It's banned in casinos because, and for people that don't know what the martingale strategy is, it's for example, if you take a bet for a $10 bet, if you lose that bet, you'll double up your bet. If you lose that bet, you double up, and you just keep going until you win, right? So you could have a 10% win rate and still make money, right?
Oh, wow.
And so we found out that, hey, if we set up a trade that has a 68% chance of winning, what are the chances of it losing 5 times in a row? It's 68% times exponential to 5. So the number is under 1% chance. So you have a 99% chance of winning in the stock market, which is incredible. And that's why we kind of got recognized with the Wall Street Journal, because our size is actually growing. So we might start with one contract and kind of escalate that up. When with 1,000 plus people, it gets noticed.
Well, that's pretty cool. I mean, you're doing what a lot of entrepreneurs do. They look at a lot of businesses. Years ago, I track a lot of stuff. I keep libraries and I track stuff in my head. Like I would count how many billboards a company would have, and I knew what billboards cost. So I'd be like, okay, well, they're spending this much on marketing. I wonder what their return is. Here's kind of an interesting piece of marketing that I don't know, it's working, or, I would just analyze marketing, and I would analyze companies and then try and figure out how much they were making. And I was like, I was trying to figure out which businesses I should go in, like you. And so you kind of, having that sort of outlook as an entrepreneur, potential entrepreneur, is very helpful. And sometimes a lot of the data, you can use for other things, and that's really what you're doing. You're using, a business model and then a gaming odds model to game the system. And that's really what anyone's trying to do on like Wall Street or in just about anything else in life. They're trying to figure out how can you beat the system, and how can you make money, and how can you build the better widget, as it were, on how to get things done. Now, for someone who wants to invest in your community or get involved in your community, what's required of them?
Trading is a business to start, and in order to trade, you always need capital, right?
What?
And, yeah, of course, you always need capital. But
I've got some monopoly money over here.
Yeah, and so we found that the optimal amount that you need in order to take advantage of our program and our system or strategy is about $26,000.
Cool.
And that's because you need to be able to withstand drawdown, right? The market isn't a crazy enough place to reward undeserving people. And so even though it's, we have a 99% chance of making money, there's always that 1% chance that people are like, well, what happens if you blow up? But when people are saying, well, there's risk to the strategy, and they don't fully understand all the numbers with it, right? And so one crucial thing that people kind of miss is that, yeah, you have a 99% chance of winning, and there's a chance of blowing up. But what is the probability that you could potentially double or triple your count before that happens? And that points back to positive expectancy, right? So if you took, for example, hypothetically, if you took a $26,000 count and it magically grew to $100K, right? You have about, around that $70,000 to play with, and you can take out your initial principal and trade completely with house money. So if anything happens, you still have capital there. That's positive expectancy, right?
Yeah. That you're kind of preserved, and because things do happen. You do lose from time to time. And it sounds like you guys have got it down to quite a thing. Do they need to be accredited investors in any way, shape, or form, or have a net worth or anything else to join the group?
Well, the great thing about this is that you don't need to be accredited. And the only thing you need to be accredited and a qualified client is for my hedge fund.
Okay.
So I manage a fund, and I have a separately different set of regulations for that.
Oh, cool.
Yeah.
So can people invest in your fund? Do we want to promote that or give a plug out to that?
I have a 506B, so I can't really advertise.
Oh, okay.
I can't really advertise, but
okay.
We magically become friends through the community, then that's up for discussion.
Okay. So now do you guys move as like what do they call those people who they kind of move off the internet on stocks and stuff? They've been buying like I think GameStop and different things. I forget what they call them, but they're like they kind of buy as a group of people, and that buying power really makes the mass. Is that what you do in the community? You move as a mass?
Not that's called a pump and dump. So
okay,
and I think that's illegal.
Okay.
So
I'm clearly not a professional on stock trading now.
Yeah, with pump and dumps, people buy like securities like GameStop and like securities that doesn't require too much money to move. And if you're too late for those, like there's going to be losers. Like, stocks is kind of like I kind of sometimes compare it to like a pyramid. So like the more people that go into it, the price increases.
Yeah.
The way we're doing it is a bit differently, because it's very different in a way where we all have the same strikes. We all have the same grade premium. We all get, basically the same results, right? So if I'm, profitable in a trade, everybody else should be too, right? And so
now you talk about trading psychology over chart porn. I think I know what chart porn is, because I used to get back in the day. They would mail you this thing that was like this thick of the stocks. And it was all the charts and stuff, and you get your ink all over your hands. Those are the days. Usually by the time you got it in the mail, it's too late. So tell us what that is, the trading psychology over chart porn.
You might hear this often as a trader, that, psychology is like 90% of your job and 10% is the execution. A lot of people don't get the execution part because they don't have the correct systems, the correct strategies, right? So there's two things that you need to be a successful trader. Number one is you need the strategy. Number two is you need to have the mental capacity in order to take those trades. Because trading gets scary, like it gets scary because you have to have enough capital in order to defend your position, right? And so I kind of joke about this because I think that in order to be a trader, you also have to enjoy like skydiving or like climbing Mount Everest or like being in the military, right? Because all these different professions, they take on substantial risk, right?
Yeah.
But risk is always relative, right? Risk to you may be very different to me. And risk might be different depending on our circumstances and our positions. I've talked about this, which was positive expectancy, right? Once you get to a certain point where you have positive expectancy, your emotions, it kind of fades away. And so you're not too scared anymore, right? Emotion is always tied to the capital that you're trading with. So if you're trading with like your life savings or something like that, you're going to feel a certain way more than somebody else that might be trading with less, right?
Yeah.
And so I think psychology is it's 90% of your trading. And so the strategy, it's replicatable. Like strategy in our SPX program, we teach everybody the same thing. We manage over 1,000 plus people, but not everybody gets the same results because why? You get scared. You might close positions early. You might feel a certain way with your own psychology, right? That's those things I can't control, right? And those are the things that are kind of outside of the scope of my program. Let's say psychology, it's a crucial thing because with charts are very subjective too, right?
Yeah.
It's based on interpretation. So if we both look at the same chart, somebody that has a different trading style might look at it a certain way. And that's why our strategy, we focus on more of a statistical based strategy. We don't look at the charts. We don't look at the fundamentals. We look at the statistics. Well, what are the probabilities that's already baked in? It shows us on the chart. Like when we build a chart, it tells us what a probability of profit is, right?
Really?
So we that's it shows it right in front of face. So we configure it in a way where we can be profitable, or at least we have an accuracy that where we can have linear growth.
Yeah.
And the thing is that people think that you need to have a high accuracy in order to make money, and that's false.
Yeah.
You can actually have like a 10% accuracy rate and still make money in the market.
Really? Wow. Yeah. So discipline's really important, the psychology of it. You mentioned, sometimes how people feel. We've had professionals like yourself on the show, and one thing they talk about is, if you use emotional decisions in investment making, and a lot of people do, that can be bad. And so, you're really focused on the specifics and the math and the statistics and nailing that all down, which I think sounds like it really makes you different from other companies that are out there.
Yeah, I think discretion as a trader can sometimes bite you in it can bite you. So it's the discretion that definitely ruins your trading.
Yeah, because if you panic, right, or you use emotional decisions, you panic and stuff. Yeah.
Yeah, because we have a system, so it tells you like what you need to do for the next 5 days, right? And the only time we might use discretion is like if we're analyzing charts, and it's not required, right? But as me, I've been doing this for a long time, so I could look at charts and I might have like my own opinion on what it could do. And if we're already in trades and we're following the system and in the charts, I feel like there might be a substantial amount of risk here. We might use technical analysis to eliminate risk. And that's what sets traders apart. Some people use technical analysis in order to add risk. They might be like, well, I think this is going to go down. I want to add positions and add risk. Take a bet. And there's other people that are following a system and they already have positions on within the system. And they might use their analysis. Like, there might be risk here, so we're going to eliminate the risk. So we're not adding more risk. Always use technical analysis to remove risk. Yeah.
And then it's basically data-driven, rules-based, community-supportive. And, there's a lot of groups out there that are signal peddlers, I guess they call them, and hype groups. Do you guys find you're different than that, evidently?
Well, before Inside Options, I've tried every single group.
Oh, really?
I've tried a lot of groups, and
Good to know.
it's a lot of them are discretional.
Okay.
And I didn't find much success following other people because
Wow.
you would always get into different position size, and you might it's just not never the same.
Yeah.
And so that's why what we're doing is very different because everything's verifiable, right?
Yeah.
We're all getting in the same positions. There might be some slight slippage in the amount of premium we're getting, but we're all getting into the same position.
Wow.
And
There you go.
we can track basically all our trades for the past 3 years we've been doing this.
Yeah.
And so I think when you go and you look at different groups, there could be a lot of discrepancies, right?
Mhm.
There's a lot of Forex bots actually,
Really?
and they work for a while and then they don't. And so we actually get a lot of people that join our community that have been doing like Forex bots, and they're like, well, I did this for a year, I got like 6-7% return a month, and in a year it blew out my account. And so it's just things like that. Things work until they don't. And sometimes you need to everybody needs to do their due diligence.
Yeah.
Right? And so
Yeah. And what do traders get wrong about high win rates and fancy setups? Why a 90% rate isn't always profitable?
well, we can always look at different examples. Like for example, if we were to take 10 trades, right? And
Mhm.
9 out of those 10 trades would made $100. Well, on the 10th trade, if you're feeling, really confident, you're going to put down maybe a bit more money and you end up losing all your profits, right? You take a $2,000 bet and you're down $2,000. Now you have a 90% accuracy because you won those 9 trades, but you lost the 10th one. So you have a 90% accuracy and you're still losing money. And with strategies, like when you're building strategies and when you're looking at strategies on the outside, it has an accuracy scale, right? So either that strategy it requires 80% to make money, or it requires a lower percentage, and we're on the lower percentage, right? Our strategy, we only require about 16% accuracy rate. The minimum is 16% accuracy in order to be profitable. And I rather be wrong most of the time and make money than having to be right every single time.
Yeah. Well, as long as you're making money, I mean, you're moving ahead, right?
Yeah.
That's always important. So you guys have been doing this for 3 years. What's the vision moving forward? Is there any new things coming down the pike? What's your vision on what you're building here and what people should be getting involved with?
I did read an X, well, before it was Twitter. It was a Twitter post from a hedge fund manager, and he said that with $13,000, if you gained 13% in 13 years or something like that, it comes out to like $1 million. And with what we're doing, all our trades are verifiable. And I don't want to say different. I want to be careful with the numbers I say on here.
Yeah.
But our vision is that this could be life changing, right? For us. And when we show it to our community members, sometimes if I were to pitch my program to myself 10 years ago, I would think it would be a scam. And a lot of people think it's a scam because it's the numbers sometimes, if you look at it, could be exceeding like standard benchmarks.
Yeah.
Right? And so on paper, I like to play with like compounding calculators, like on my free time. Yeah, that's what I do on my free time. So I'm not really good at math. I actually failed math a lot of times.
Really?
School, yeah. But I've grown to love it in a sense where I focus on what I'm good at, which is putting numbers into tools that are already made. So I'm a master delegator, and I like using tools like that's already there. But I like to use the compound interest calculator, and I like to compound on a monthly cycle. And so if you start with like 100K and you compound that over 10 years, that turns into like something billions of dollars. So that's our vision. And of course, it's always going to be on paper, and there's always going to be a journey there, right? We've been doing this for 3 years, and a lot of people that have been with us for 3 years, they start to see the vision too. So that's kind of where we're at. Yeah.
Well, it's all math, statistics, gaming the system. I mean, you've given a lot of great entrepreneur lessons too, as an entrepreneur, looking around, seeing what's out there, monitoring situations, being aware, figuring out what works for you, kind of what finding what you enjoy doing that kind of fits your life. Everyone kind of has to find that. I always tell people when they are looking for a business, find something you really enjoy, because it makes it hard to get up every day. Even if you're a super successful business person, if you don't love what you're doing, it's definitely hard. So it's good that you've put this all together. You're running the stats, the math, all that sort of stuff. David, as we go out, give people a final pitch out to reach out to you guys. How can they onboard? Can they get more information, et cetera, et cetera?
Yeah, sure. So if you are watching this podcast, listening to this podcast, and you are somebody who wants to trade or get started, or you're a trader who's been struggling, all you need to do is head over to our website at insideoptions.io, fill out the form, and our team will schedule an appointment with you. Pretty straightforward. Yeah.
Well, thank you very much for coming on the show, David. This has been fun. And what a great entrepreneurial journey. There's hope for people out there who flunk math, flunk school, and that's what I did. I flunked everything.
Just look at me.
I flunked math, and I do all the accounting for my companies. And when I talk to people about the law of averages, it's amazing to me. I swear to God, 99% of people can't figure out what an average is. It's crazy. And
now we got ChatGPT.
Yeah, and now we're like, you can flunk math, you can flunk school, but if you got the drive and you find what your in is, sometimes it's just being in business is kind of like a safe, and you're trying to crack it, and you just have to find that right code, and you just have to keep playing and fiddling and experimenting and learning. Okay, well, that doesn't, keeping track of your data, and then you eventually one day it just clicks, and you go, wow, that worked. No, what did I do wrong?
Yeah, exactly.
We used to say that in golf. Anytime we hit a good shot, we'd be like, remember what you did wrong. So thank you very much, David, for coming on the show and for insightful stuff. People can check you out on the interwebs. Thanks for tuning in. Go to goodreads.com/Chris Voss, linkedin.com/Chris Voss, Chris Voss 1, the TikTokity, and all those crazy places on the internet. Be good to each other. Stay safe. We'll see you next time. There you